today. I'm just gonna give everyone like 5 to 7 minutes here, just to get in. I know some people can be running late, so just want to give them some time here to get in here. We'll start in like 5 minutes. If you guys want to go get water or do anything you have to do. I'll put up my screen here shortly. Just trying to get this set up for you guys. Just a reminder, I am starting at 9:07 to give some people some time to get into here. So if you guys need to get a drink or anything, now would be the time. We are starting in 3 minutes. Let me add everyone one more time. We're gonna be starting in 3 minutes. Add everyone. I'm giving some people some time to get in here. No, in 2 minutes, sorry. 2 minutes. All right, we're starting in 1 minute. I'm going to be sharing my screen here. I'm excited for this one. Soon I'll be showing some graphics on the screen, but for right now, for the beginning, we'll just look at the chart for right now because we're going to be going over three. We're going to be touching over three topics today. The three topics today. The first one is going to be psychology. We got to lock in the mindset, right? So the first one's going to be the psychology when looking for a stop loss and taking profits. Then we're going to run the numbers on why stop loss and knowing when to take profits is so important. And then lastly, I'm going to show you guys how to use technical analysis and dealer edge from Trade Echo to find your to know when you should stop out and when the trade is invalidated, and to know when you should be taking profits. And then at the end we can do some Q&A. We are starting here. Make sure everyone's in here. Looks like everyone's in here. Okay. Let me share my screen. Let's talk about the mindset. Yeah, of course. I'm gonna be going over that. I think mindset's like the most crucial thing. We're definitely gonna be touching that first. Any questions you guys have? Anything you guys want me to go over? We'll be going over that. Let me see this here. Trying to get this Trade Echo thing set up here. Change the date here. That's good enough. Okay. Let me see. You guys can see the screen? Okay. We got 88 people in here. Gonna be a great session. All right. Good morning, everyone. I hope you guys have had a great morning so far. I hope you guys ate and everything. In today's session, we'll be covering stop loss. Sorry, my voice is going out a bit here. Drink some water. We'll be covering stop loss and taking profit. From what I've seen in here, one of the biggest issues I see people struggling with isn't finding good entries, it's managing their exits. People are cutting their winners way too short and are holding on to the losing trades for far too long. Now, before I continue, I want to emphasize I am not a financial advisor, and this is not financial advice. This is purely for educational purposes only. All right, now let's continue. The truth is, if you can't stay disciplined to your stops and are letting fear dictate when you take profits, then your strategy is not going to be profitable. It doesn't matter how good of an entry you get. Today, we're not going to be learning about any more indicators and stuff like that. We're going to be installing a simple system so discipline becomes automatic. So before we start getting into the tools and strategies, we have to lock in the mindset. There are two reoccurring psychological issues I see people struggling with when it comes to stop losses and taking profit. The first one is fear, which is often triggered when your risk is too big for your account. The thought process is always the same. Damn, I size too heavy, so if I stop out here, then I won't have enough for the next trade. Or you fear that if you lose on this trade, it'll be too big of a hit on your account. So you stop out prematurely and the trade goes without you. This is a critical error because you must go into a trade with no fear. And if you feel fear, then that's your intuition telling you that something's wrong, and for good reason. We want systems to drive our trading, not emotions. So we're going to fix this with some tools. Here's some simple fixes. Say, if you're trading, if you get an alert that someone took a NDX or SPX trade, and you feel that that is too expensive for you, where you have to oversize in order to have multiple contracts. It's simple. You just trade the alternative, SPY or QQ. Very, very simple, right? If they're trading SPX, and I know SPX and NDX can get very expensive, there is alternatives to that, which is SPY and QQ, and typically that allows you to mimic how much contracts they would typically take. Now, say you're trading a single ticker name, you just have to take fewer contracts. You have to protect your account. The main goal in the market is protecting your capital. Remember, like in chess, you have to protect the king in order to win the game, right? You can't get too aggressive on your attacks or else you'll lose the chess game. It's as simple as that. The second issue I've noticed is that people begin cultivating a defeatist mindset, and in this context, I think and in this context, a defeatist mindset is a mix of frustration and discouragement, which usually comes after they get stopped out, and then the trades end up running without them. And yeah, sometimes that will happen, but the real danger is what your brain does next. So this often happens to a lot of people. I know a lot of people can attest to this. You get stopped out, price flips. Now you start believing every losing trade will flip too. So next time that you're in a losing trade and you're about to stop out, you don't. You hold, you hope, and you start bargaining. Not because you have a reason to, but because that last losing trade chipped your discipline. So it's very important. These two things that I'm talking about, the fear and the defeatist mindset, right? These two things, psychology is a big part of trading. Now, if you have fear, it's your body telling you that something's wrong, that you're oversized, that you shouldn't be sizing this big. And ultimately with fear, you'll be always taking losing trades. Now, the defeatist mindset, this comes from ultimately taking these losses and then the trade reversing, and you just sitting there frustrated and defeated and not knowing what to do and thinking you have bad luck and all these things, which that is not the case, right? Markets are systematic, markets make sense, markets are not gambling, so you don't have this bad luck. You shouldn't be trying to put that into your head. You just are not following the right system. You're not staying disciplined, and there's something you have to fix ultimately. So it's very important to stay disciplined to your stop loss, right? Even if the trade ends up reversing for whatever reason, because if you're not disciplined on your stop loss, that's how you go from a small controlled loss into a disaster trade. That mindset is detrimental because it leads people to stop respecting their stop, which is a critical tool in order to be successful in the market. So one thing I'll say is if a 15% stop makes you hesitate, that means you should rethink your sizing, right? If you can't afford to even lose 15% on a trade, you should really rethink your sizing. Now, we're going to be looking at how I know how I should stop, like when to stop out and when I should take profit. It's pretty simple. I'm going to show you guys some things on the charts that I look at, some tools that I use to ultimately help me find my stops and take profit targets. Before we go on, we can do. Does anyone confused? Any questions or anything in the chat? We can take some time here before we move on to this. If anyone has any questions over psychology or anything like that, because psychology is a big player when it comes to trading in general. Yes, I'm going to be talking about right now, shortly, here about support and resistance levels and how I find these levels right now. And then after this, we'll run the numbers on mathematically, like why it's important that you're taking profit at the right moment and you're not stopping out and letting these losing trades taking too much capital from your account. So any questions here about psychology? If not, I'm gonna just jump into what I use from Trade Echo and how I use Trade Echo's the gamma nodes and everything. All right, seems like I see Sturchef shared experience. How can you make the switch from paper to real? I mean, making that switch is really you just have to do it, right? But you have to have you have to size your port to where you don't have fear. You have to remove all fear from trading. You have to be a robot. You have to just trade your systems. Now, if your systems are working, then you have to change your systems. It's that simple. You just have to dive into it. You have to take that leap. There's not really anything. There's no magic you can pull to go from paper trading to real money. Can you share example from past where you struggled at trading and what you did to overcome? I mean, we always when I struggled, what I did was really just look within like you have to look within yourself and look at what you're doing, right? Like trading is you versus you. Um, the markets are the only place that really everything is on you basically. If you make a mistake, it's on you. If you take the wrong trade, it's on you. So it's really you have to look within yourself, look at why you lost those trades and what you can do better because there's always a reason. I can promise you the sometimes the markets may be random, but underlying there's some things that you can't see that are playing behind the scenes that are the reason for those moves typically all the time. So it's something you really have to look within yourself and see what errors you're making and correct them. That's the only way. That's how I overcame any struggle I got in trading. I looked. You can like look for guidance or anything, but ultimately it's something you have to fix within yourself. On psychology, how long did it take you to be firm on stop loss and TP? Do you have something you tell yourself before trading? Well, what really made me disciplined to my stop loss was seeing the numbers. Right, I feel like people lie, but numbers don't. So I ran the numbers, and mathematically speaking, it's really I'm gonna cut it really simple. Um, if you make more than you lose, you'll be profitable, right? So I just need to lose as little as I can and make as much as I can, and I'll be profitable. It's that simple. You find an edge that works for you. You find an edge that allows you to make more than when you lose, and you'll be profitable. It's really that simple. To cut everything short, to make everything simple, you just have to make more on your winning trades than on your losing trades, and then that's what really makes me disciplined on my stop loss because I know if I take this 15% stop, I'll make that back on the next winning trade. Like you guys have seen in the chat, right? When we took those 10% to 50% losses, and then I told you on my next trade, it's gonna make 3x more than I lost, and it typically does. All right. Um, I'm gonna take like one more question, and then we're gonna jump into technical analysis here. I mean, it depends on your strategy. Averaging into a trade could work, but you would have to build a system around that. You wouldn't want to have it randomized, right? You don't want to randomly be sizing into random trades. You want to have a system and you want to follow that system, right? So if you're taking a piecemeal size into a trade and you're like, okay, there's a chance that it could go against me for a little bit, but I know in the long run, this trade is going to work out for me. So you start sizing in appropriately. But that's you thinking systematically. You shouldn't just be averaging in at random. So that's the last question I'll take for now. Right now we'll be going over how to um, how to know when you should stop out, when a trade is invalidated, and when you should take profits, right? So let me drag in. Gonna be dragging in the trade echo here. Hold on. Let me see if I can drag this in. Right here. Hold on. Trying to drag in this trade echo here. Fix. All right, here we go. So a big tool I use on Trade Echo is the dealer edge. Right now it's after hours, so it's not gonna show too much, but it shows just enough, right? It can show just enough to where I can give you guys some good examples. I use Robinhood Legend for execution. I could go over at the end because I know a lot of people don't use Robinhood. So at the end, I'll go over how I use stop limits and do limit orders. Okay, we're gonna go over support and resistance, which is the number one thing when it comes into finding your stop losses and taking profits, right? So for example, let's say we're in some calls, okay? We're taking some calls. We'll use the Bitcoin chart. Let's do puts just for this example here because it looks like it's gonna go down. All right. For Bitcoin, say I get into some puts at my right here, right? So I enter off this wick here. I'm into this trade. So it's critical. It's really simple. Support and resistance. So basically, how you can find support and resistance on a chart is you go to. I typically like using. Sorry about that. So support and resistance. What I like using is a 45-minute chart here. We go on the 45-minute chart. This is a little secret. I know a lot of people. Wait, can't see your screen. There's some people who say they can't see my screen. Sir, can't see your screen. Probably have to. You gotta probably have to. Yeah, I can see it. Okay. As long as most of you guys can see the screen, that's okay. So what I use here, a little secret, I use a 45-minute chart to find support and resistance levels, key support and resistance levels. How you can find this, the easiest way, there's a lot of ways to find this, but what typically works for me is you look at previous support levels, right? Previous levels where price got bought up, that's how you find support. And typically, like, it's really simple. This is a support level here. You can kind of see like around. It rounds out, support level. Rounds out, support level. It usually comes from a big sell-off. You see it round out here. Now this is a key support level. Same thing here. Sell-off, rounds out, key support level. Right now, Bitcoin is making higher lows, which is bullish structure, right? So to stay on topic here, if I'm in puts, right? So we can see this is a support level. We'll mark it. And remember, support levels, people, you don't have to be on the money with them. Think of them as ranges. So let's get a box here. Let's get a box. Where's the box going to be at? Right here, rectangle. All right, think of them like ranges. Always think of support and resistance levels as ranges. It'll never be perfect, never. So we're gonna take this range here. Right, I'll say this is like a big support level. Now, if I'm taking a short, this is something I wanna look at. Now, I'm gonna show you guys how you combine appropriate trimming with taking profit levels. So if I know here, right, if I'm taking a 0DT trade, typically this move will probably pay out huge, and typically it won't happen. But it's something to watch out for because this is a big support level. So say if I'm having some runners here, this is probably when I want to cut the runners. My first level that I want to look to trim at, if you guys can kind of see the pattern here, would be right here. This is when I would be looking to trim. Right here. And you guys can see the pattern, right? It's a very simple pattern to see. You see the rounding, you see the rounding, you see the rounding. It's like just look for when price rounds out, that would be a key support level. When price is rounding out on the 45-minute time frame. I want to make things as simple as possible for you guys so you guys can see it with your eye, like quickly. So when price rounds out here,